Hi, this is Chuck, better known as Low Trade. Tonight I'm going to do a evaluation on Washington Mutual, symbol YAMUQ. What I'm doing here, I want to note in the beginning that I'm doing some unusual things for myself. First, this is a weekly chart. This is a long-term position trade that I'm evaluating, and I'm using a log graph scale. Normally I don't recommend using that scale, but for visual effect it's better to use it for tonight. Now we're going to be talking about a rounded bottom play, and as you can see by the black line down here that we definitely have the rounded bottom, and the green calculations would be the target for that play, for that chart pattern. Now if you come over here, you're going to see that the breakout candle formed within 1 week reached its target. During the second week, emotion carried it all the way up, and then reason carried it all the way down. So we have a swing of the pendulum here in two different directions. Now the one thing about the rounded bottom play that I wanted to point out, and part of the reason I'm doing this, is with any rounded bottom you have the first part of a cup and handle. So anytime you have a breakout of a rounded bottom, you have a chance for a cup and handle to save you and allow you a second chance at the trade, and that's what's occurring here. Now with a cup and handle, I personally have some restrictions, and that's why I drew the fibs lines over here. These lines here are your fibs 50, your 50 and your 38% line. I have a rule, a personal rule, that a retrace should not go below the 38% fib lines. Many chartists will allow it to go down to the 50 and even to 61%. But my personal opinion is the further it goes down, the less chance you have of ever rebounding and continuing up. So right now, after 2 weeks, we're below my personal limits. But you still have a better than 50-50 chance that this may break out of the downtrend and give you a cup and handle pattern. So I figured I'd evaluate this and allow you guys to put it on a watch. I will briefly cover the entry points with my indicators. As you can see, there's a cross of the DMI up here, and there is a change of the ADX here where it starts traveling up in the same direction. So your confirmed entry would be right around this area, and your early entry would be right around this area. As you can see down here, early entry, over here confirmed entry. Also I use an overlay for entry, and my overlay is the 5, 10, and 20 simple moving averages. Your 5, 10, and 20 lined up in order is telling you to be in the stock, and your 5, 10, where are we at? 5, 10, and 20 out of order is telling you to be out of the stock. Anytime there's a cross of these lines, you can have early entry signals. Right here is an early entry signal, and you can have confirmed entry signals. Right here is a confirmed entry signal, because now you have all three lined up in order. From that point in, you should be in the stock. Now we'll come down quickly and review the support indicators that I use. We have the Scotch RSI. You can see it tells you when to be in, when it's below the 2 line, and to be out. To be out when it's below the 2 line, and to be in when it's above the 80 line. The last indicator that I use for support is your CMF. That's your money flow. I use it as a pressure indicator. Here you're seeing positive pressure. Here you're seeing negative pressure. So even during the increase, you're seeing reduced negative pressure. You've never had in this trade a positive mindset from retail behind the move, supporting any move in this chart, except back here during this phase of this very first run. You add the fact that retail's support pressure has never been behind it, and up here, we'll go back to the chart, and that the retrace is already past my personal limitation of 38%, and my evaluation would be that play is over, and I wouldn't continue watching it. But I am one of many, and many other chartists would continue watching this thing all the way down to 61% for the possibility of a breakout. Now I'm going to recap with this. The reason I'm behind on this move is the student just brought this to my website tonight asking about it, and I took a look at the daily and automatically noticed the curved bottom type and went into the long-term rounded bottom pattern to do my evaluation. We are definitely behind 2 weeks in this, and my overall evaluation is possible but not probable. That's about it for tonight. I'm going to sign off, and I hope this assists you in your decisions.